Hey, Mr. 800.
Hey, Ms. Matthews, how are you?
I'm good. So first and foremost, let me address the audience. Thank you guys for tuning in to my channel. Of course, if you don't know who I am, my name is Tiffany Matthews. I always say I'm with Real Estate Solutions because that's the business that I'm in. I'm located here in the Baltimore, Maryland area. Been doing real estate for a little over 3 years actually. So I am today doing a video discussion with a colleague regarding your credit and your credit score and the credit repair process. So without further ado, I'm going to allow Mr. Timothy Green to introduce himself and tell us a little bit about himself, how he got started in the credit repair business, and a little bit about your company.
Okay. Well, my name is Timothy Green. You can call me Michael. I graduated from Georgia College, University of Kansas, Walden University, Liberty University, Macon State University. So that's a couple of my accolades. I got into credit repair because when I got out of college, my credit was horrible. It was in the fours. And you really don't understand how important credit is until you start getting older. When I got married and I couldn't, afford a house right off the bat, I had to rent. And then it was hard to rent a home because if you got bad credit, don't nobody want to take a chance with you. So it kind of became a obsession because it was really, really stunting my growth as a man. And at that time when I was married as a family man, because we had to put everything in my wife's credit because she was the only one that had good credit. So everything that we did that had to do with credit, cars, rent, utilities, all of that affects you if you don't have great credit. So it became this obsession. I've got my PhD in business and finance because I wanted to know more and more, not just about finances, but more and more about credit. And I studied up on the people and I really learned the business. But it started with me. I got my own credit right. Hence the name Mr. 800. I didn't stop till my scores were in the eights. And that's what we do when I get a client. I'm not going to stop just because their credit is okay or excellent. We don't stop until their credit is 800. So.
Okay, well, good. Look, you talked about a lot in just that little short period of time there. So
Ms. Matthews, you know I can talk, so I get that from your husband. So.
We'll back up a little bit and kind of cover some of that a little bit more in detail. So you mentioned that it started with you and back in college days. I know I was there myself as well. In college, you are really targeted by a lot of credit repair companies. I know back in the day when I was in school, they would have a whole table set up in the cafeteria or outside, and they were pretty much soliciting, the college students to come up, hey, fill out this credit application. They know you don't have a job, but with the anticipation that you're a college grad, you're going to get out, you're going to have this great job, and you'll be able to pay your credit card bill. They really didn't care about that. So I can definitely relate to that because the same thing happened to me. I got several credit cards in college. And when I got out of college, well, actually, while I was in college, it was difficult trying to pay that monthly credit card bill. And so what happens is you don't pay it, you get a late payment. So let's talk about that. How does a late payment affect your credit score?
It affects your score between 3 and 12 points. And the more late payments, it can ruin your score. Late payments, of course, and we're going to talk about this later on, but repossessions, bankruptcies, all of that just killed your credit. But when I was a college student with you, the only thing that you needed was your college ID. And
Yeah.
and you got a credit card of $2,000, $3,000 in the mail within what, 2-3 weeks. And as college students, I wasn't taught finances by my parents at all. I wasn't taught by credit. Credit was the devil. You only use credit in emergencies. You never pulled it out. You never used a credit card at all. And when I got
You are so right about that, Tim. I think I was taught that too. Not that it was necessarily bad, but just that you really don't use it unless it's absolutely an emergency. So yeah, that's a whole nother topic with trying to, how do you leverage your credit? But I'm gonna let you finish what you were saying just in regards to the late payment, how it affects your credit score.
Here's a perfect example. You go buy a vehicle and you're late. One payment. Now, a car usually is gonna run you between what, $30,000 for an average car to a high-end car, which is $80,000 to $100,000. I've seen this. I've seen a person. This has happened to me before. Remember, I'm not perfect. I learned a lot along the way before I knew how to really, really leverage my credit. I was late on one payment, one on my truck. And my scores then was 740, 750. My score the next 30-day cycle was in the fives across the board.
From one late payment.
From one late payment on a car note. Now imagine if you do that on a mortgage. Or
absolutely.
You do that on a bank loan. Your score is going to plummet all the way down almost 150, 160 points off that one late payment. Now, if you catch it back up and you're on time for the next 2 cycles, your scores will rise back up, because if you got a $60,000, $70,000, $80,000 car and you're paying on it like you're supposed to, that's going to look good anyway on your credit profile. That's a high-end trade line. So
you said a late payment is 12% or 12. What's
really
the breakdown of the
on
percentage on that wheel of everything that affects your credit score? So when they're doing your FICO, what are they looking at? I know late payments is one, or your payment history.
Payment history is 30%.
Okay, 30%. Okay.
And then the other big thing is, what's your credit profile? How many trade lines do you have? How many credit cards? How many charge cards? Your bank loans, all of that plays a factor too, because people feel like this as well. I've seen people that's got a 700 and 800 credit score still get turned down because they don't understand, if you don't have enough trade lines, 7 to 10 trade lines of positive credit, you're still not going to get approved for anything that you really want, because the banks are not going to take a chance on you. And that's another misconception. People think, I got this score, I can get this house. So now when the bank starts to break you down and you don't have these trade lines to match this score, you're still not going to get that home. You're still not going to get the car that you want. You're still not going to get these high-end credit cards.
So when you say trade line, what do you mean by trade line? Break that down for just the
trade lines are
person that's not in credit repair and doesn't know what trade line is.
Okay.
Is that related to the debt income to debt ratio, or?
No, it's the amount of really positive debt that you're paying. Okay. Like credit cards, charge cards, and people don't even know the difference between credit cards and charge cards. That's a whole nother story. Car notes, mortgages, anything that has to do with your credit that's going to show up that you pay monthly is a trade line. And you have to pay those on time, all the time, if you want a good credit score. And if you're trying to get a house, because a bank will literally break you down and say, okay, you were late in December of 2017. This is an issue. So when you go for a house, you need to have somebody to really, really break down your credit profile. And if this needs to be removed, or if you need to contact this creditor, you need to do so and have them remove it, or have somebody like me remove it for you, because you don't need that. You see this all the time. If they have anything late, it's gonna hurt their chances, or they're not gonna get a good interest rate.
Right. I will definitely say, with trying to purchase a home and dealing with a lender, they definitely want to see on-time payments. I know the other big thing is your income to debt ratio is a big one. If you have high debt,
right,
versus your income, then you're likely not going to get approved, even if you have a good credit score. Or I'll say you might get approved, but you might not get approved for the amount of house that you want to purchase, because you don't have enough income versus the debt that you owe. So you mentioned,
if your utilization on your credit cards are, let's say that you got a credit card that's $2,000 and you max it out, or you have spent $1,500 of it, that means your utilization is what, like almost 90% of that credit card, or 85% of the credit card. So,
and utilization is one of those that they use to calculate your FICO, correct?
Right.
Okay.
So utilization, really, people say, well, utilization need to be under 10%. I say 2% if you're trying to get an 800 score.
Okay.
You know,
so less than 2% if you want an 800 on your credit score.
Right. You need to be paying these cards off.
Okay, so Tim, let me just stop you right there. Okay. Because I know a lot of viewers are probably thinking, so I need to have less than 2% on my credit card. What's the point of having a credit card if I can't use a credit card?
Well, that's the beauty of having a credit card. You want to use a credit card more than your debit card. You shouldn't even have a debit card at this point. Your life, if you're really trying to leverage your credit, your life should be ran through credit, and then paying that debt off at the end of the month with a check.
Oh, okay.
Most people don't understand that writing a check is credit worthiness too. Remember when our parents were at the kitchen table and they would put all the bills out and they would write checks to everybody? And a lot of people still do that because they understand that writing a check shows more credit worthiness than swiping your debit card. At this point, if you have great credit, you shouldn't even have a debit card. Don't even give your children debit cards anymore. Give them a credit card with a limit that you control, with their name on it, because they're building credit. Like, if I had to do this over and I could talk to my parents, I would say, look, give me an 800 credit score coming out of college. Control my credit. Because then I'm going to be ahead in the world. Now I don't need you to sign for an apartment. I can remember when my brother got out of college, Derek, he had to ask my dad for money to get an apartment and sign for an apartment because we didn't know about credit and all that at the time, you know, and he had to get his stuff straight, and he got his stuff straight. But as parents in this generation, you should be teaching your kids, this is my gift. When you get out of college, you'll be able to do whatever you need to do as a young person. You won't need mom and daddy for nothing. I needed my mom and daddy for everything when I got out of college.
So let's talk about that. So how would a parent help their child who is still in high school or elementary school? Well, I won't say elementary school, let's say middle school to high school. How would they help their child get a high credit score, an 800 credit score straight out of high school? What are the steps? What do they need to do?
The first thing is make them an authorized user on your high-end credit card.
Okay.
You make sure that while they're on it, that this credit limit stays at a certain point and the utilization stays at 2%.
Mhm.
And the more and more that they are an authorized user, the credit score will rise and rise. And I'm talking about every credit card that that parent has, make your 13-year-old daughter or son an authorized user.
Oh, every credit card, huh?
Get them, and then give them one of the credit cards with their name on it and put a spending limit on it and make them accountable. Say, listen, you got, you're 13 years old, you're gonna go to the movies, you're gonna do certain stuff. I'm gonna give you $300 a month. And you can set the spending limit on that credit card for that child so they can't go over 300.
Mm.
So now they're learning how to use a credit card, not a debit card.
Right.
Giving them a credit card. You want to use other people's money. You don't want to use your own money. You use other people's money to get ahead and to leverage your credit. You don't use a debit card. So if you do that, 13, 14, 15, 16, 17, 18, 19, 20, 21, that's 9 years of having perfect credit from your parents as authorized users.
Mm-hmm.
So your score can only be in the 8s because it's perfect. There's no late payments. There's no derogatories. They ain't put your name on the power or the TV. You got excellent credit.
Right.
So those are the basic steps. Then you can get them a cell phone, but the only time the cell phone is going to show up is if you're not paying on it. You want stuff that's going to show up on that credit every single month, and the credit cards are the best way to do it. But the parents got to have their stuff together. If you can get a $30,000 credit card and you're only getting $2,000 credit cards and $500 credit cards, you got to figure your way out of that little, being a rat on a wheel, because a grown person with a $2,000 credit card can't do nothing. Not in this era. If you ain't got a $30,000, $40,000, $50,000 credit card in your pocket, you still.
Now, when you say do something, what do you mean by that? Because what I'm hearing you say is more than likely you're saying being able to take your credit card or your credit and to be able to leverage that. So let's talk about some of the ways that you might be able to leverage. Well, let's back up even beyond that. So why is credit so important from an economic stability standpoint?
Easy. If I'm steadily using my debit card, that debit card is attached to a bank with my money coming from my job, which is really cash, right? If I'm swiping it for gas and food, the movies, clothes, tuition, car note, mortgage, this bank account keeps going down. Now with a credit card, especially if it's American Express, the more I use it, the more I'm gaining like points and rewards. And you can turn those points and rewards into money. And you can use that money for those points and rewards and put it on gift cards and pay your bills. A lot of people don't talk about that. So if I'm using my American Express card for gas, for the mortgage, for the car note, for the car insurance, and I keep getting these points, and now I can use these points and put this money that I got from using it on a gift card to pay my American Express down. I can pay it down. I can buy clothes. I can buy food. I can do a gamut of things, and I'm not using my money on my debit card. The only time I'm going to use that money is to pay that card. That's it. But I've already gained points and I've already gained rewards by using it. The more and more you use these cards, certain cards, not all of them, but I'm a fan of American Express, they reward you. If you use your debit card, you're not being rewarded at all. You don't get free flights, free vacations, free motels, free nothing. You're just losing money.
Well, I see your point with all of that. I would say, or what comes to my mind is a person has to be really disciplined to make sure that they don't overspend on a credit card. So a lot of people that come to you because you have a credit repair company are in a situation more than likely because they didn't have a lot of discipline in paying those credit cards in a timely fashion or overspending or whatever the case may be. So what type of education and teaching do you do to those people once they're in the process of getting their credit repaired, how to prevent them from going backwards and repeating that same cycle? Because a lot of people do that. I mean, I know I've been in situations where I've had good credit and then it's gone down, not so great, and then and we all know it's very easy for your credit score to drop, but it's more difficult to get your score back up.
Right. The first thing that I like to do is remind them. Now, this is the journey that we're about to take. All your scores are in the fours. I want you to remember how you feel. I want you to remember what you can't buy. I want you to remember what you can't qualify. So most people, not all, it's going to be some that say, screw him, I got 800 score, I'm about to go shop and buy, and they're going to come back and we're going to do this process again. But a lot of them, after you kind of drill it in their head, and I'm always communicating with my clients, okay, now your score is 550. Remember, when you get to the sevens, what's going to happen, you'll get a whole bunch of pre-approval letters from credit cards. They're trying to reel you back in. Don't apply for nothing. Now you're gonna have some dummies out there that's gonna say, you know what, screw him. I'm gonna apply for the first credit card that come in the mail. Okay, and I'm gonna know because you're gonna use it. It's gonna be an inquiry, and I'm gonna call you and say, hey, why did you apply for that credit card? But I keep showing them, just remember when you couldn't get this house, when you went to Miss Matthews and she told you to come to me, you couldn't get the house that you want. So remember, if these bad habits that you had in the past come back up, you're not going to be able to get the things that you want, and you're just going to hurt your financial future.
Right.
But it normally doesn't happen until we get to the sevens when stuff starts to open up. And I really have hard talks with, if it's a man and a wife, I talk to the wife. Because normally the wife is more disciplined than the husband. And she knows the struggle because, so I kind of put all my points toward her and say, listen, you remember how it was when y'all was coming up? You couldn't get this house, you couldn't even get a pre-approval letter. But now you're about to get your dream house. Remember, once you get this score, once you get these things, it's about keeping them. Yeah. And it's about generational wealth. It's about teaching your kids, okay, this is what me and my mom, you and your mom, me and your mom went through. I'm not gonna let y'all go through this. I'm gonna teach y'all discipline. I'm gonna teach y'all how to spend money. I'm gonna show you how to budget. I'm gonna show you how to write a check and balance your checkbook. People don't even use, since people use debit cards, nobody balances a checkbook.
Very true.
It's not even taught anymore. Nobody knows how to write it. It was a kid in front of me that didn't even know how to write a check. And that's like one of the most fundamental things that every young person needs to know is how to really write a check the right way. Because I'd rather you learn how to write a check than swipe a debit. If God ever blessed me with a kid, I would never give him a debit card. It's too many bad habits. Believe it or not, it's more bad habits with a debit card than a credit card.
So why do you say that?
Because you're using your money. Every swipe, your bank account goes down and down and down, and you get no rewards. So if I'm not getting the rewards, why am I going to keep swiping this card when I can go to use my American Express card, and every time I swipe, I get a gift, I get points, I can fly, I can do whatever I want to, as long as I keep using this card responsibly. Most people don't do that.
Yeah, I was going to say responsibly definitely is the key the key word.
Let me ask you this. If you already have a set amount of bills, and you know if you use this card every month to pay these bills, that you're gonna have to pay with this debit card anyway. But with this card, you're gonna get a whole bunch of points and then dividends every quarter. Why am I gonna use this debit card when I can just use this credit card? It just makes sense now. It didn't make sense 15 years ago. And it definitely didn't make sense when I was in college, because here's the funny thing about school. They teach us a lot of stuff that we will never apply in our real life. All these business classes, I took a truckload of business classes that never taught me about money. Never.
Makes you say,
Yeah, makes you say,
why is that, I wonder?
Exactly.
You know, that's one of those things I guess you got to educate yourself on. Some people might say it's all a big scheme to get people spending money and in debt and always owing somebody.
It's our culture. We're not taught about money at all. It's go to school, get a job, work for somebody for 30, 40, 50 years, and retire broke. Because if you don't know how to manage your money, then you're going to retire broke. Or you're going to have to go back to Walmart like some of these. I see 60, 70, 80-year-old women and men working at Walmart because they still need money.
Yeah.
And they just retired, but they still need money, you know?
Yeah. But. Which is really sad. So with all of that, it just makes me think that, like you said, we have not been taught the proper way to deal with our finances, how to really save, how to invest, and how important credit is. You know, when I think about credit, you know, as a young person, I think it's gotten worse as I've gotten older, or as the times have gone. They're using credit now for everything. You know, once upon a time, I don't think they were using your FICO score to, you know, get your water bill turned on. Yes. But now, you know, they're pulling your credit to get your water bill, if you want a cell phone, your electric bill. If it's not tip top, then you're gonna have to put this deposit down.
Yep.
So your credit is really used for so many things. And as you know, I am a realtor. So I work with so many clients who are trying to buy homes, and they don't realize until they're in that moment of applying for that loan application, all the things they've done in the past really does affect what they're trying to do in the future. Same thing, just like a college student, you know, or I won't even say a college student, a high school student. I'm trying to tell my son now, or I've always told him, it's so important to keep your GPA high, because when you get in college, they're going to look at your GPA. They're going to be looking at those SAT scores. And when you try to get into your major, they're going to be looking at what your GPA is. And if it's not to their standard, then you're going to have to go back, take additional classes, repeat classes, and create all of this back work you got to do just to get to your ultimate goal. So education is the key, which is why I wanted to have this conversation with you about why it's so important to have your credit tip top, and what are the important things that people need to do. So let me ask you this. Let's just say we've talked about, you know, setting your kids up to have that perfect 800 score when they get out of school. So once they are out of school, they've got that 800 credit score, what are they going to do to maintain it? Or what is the person that's gone through your program and had their credit repaired, what are they going to do to maintain it?
One is you have to keep educating yourself about credit all the time. And a lot of people that come through me, it's okay, when am I going to get this high-end credit card to help my credit even further? So now I got some kind of power. Okay, that's the first test. When you first apply for that credit card, that's $30, $40, $50,000 and you get it. Okay, once you get it, what are you going to do with it? What are your plans for it? Is it just to spend? Is it just to just go out there and just buy stuff that you don't need? Or are you going to leverage it so when it's time to get something big, banks can say, okay, Navy Federal gave him 50,000. Chase gave him 60,000. American Express, his purchase power is $120,000. So your overall credit strength is power. Going into a bank with great credit is more important than going to a bank with $2 million worth of cash. Because that $2 million worth of cash is nothing to a bank. You're not proving yourself to a bank. But if I walk behind you and my credit profile is worth $2 million, I can leverage that, get another loan, $200,000-$300,000, go and start another business, and I'm not using my money at all.
Right.
I'm using the bank's money to start another business.
Is that kind of like secured credit cards? Do you recommend that for people going and getting secured credit cards to the bank? I hear a lot of people say, get your secured credit card and use the bank's money instead of using your money.
Well, how can I say this? I don't like some secured credit cards. Some secured credit cards are just garbage because you still don't get $300-$400. I like the secured credit cards where if you put down 1,000, they'll triple it to 3,000. Or if you put down $1,500, we'll go up to $5,000. And then in 10 months, if you've done what you're supposed to do, we'll give you the $1,500 back. You still got a $5,000 credit card. Those are the kind of secured credit cards I look at and I point my clients to. But the ones that say, okay, we'll give you $300-$400 because your credit bad.
Yeah.
What is that doing for you? Because you can't spend but a certain amount of that $400-$500 or your utilization gonna be too high and you still hurting your credit. That's why I don't understand how people think that having a $2,000 credit card is power. You can only spend so much. And as an adult, we can spend $2,000. It can be a $2,000 problem at your house.
Yeah, I
Just
mean,
like that.
Yeah, inflation is
right.
We were just
something
talking about that earlier today.
Water pump, or something could go on with the toilets, with the plumbing, and your insurance may not cover all of it, or you may not have the type of insurance that cover all the plumbing. I've seen this too. So, but if you got that $50,000 credit card, you got power and you got safety and you got security.
So let me ask you this. Is the 50,000 credit card, is that primarily just based off my credit score, or is that also based off my income?
It's based off your income, and it's based on how strong your credit profile is. Nobody's going to give you a $50,000 credit card if you only have a $2,000 credit card on your credit profile right now. That's when getting trade lines and putting trade lines on your credit profile is going to help you. A trade line is, and there's a lot of trade line companies. I'm a trade line broker, meaning that you use somebody, you're actually piggybacking off somebody that has great credit and big credit cards for a certain timeline.
Okay, so similar to like if I were to put my child on my credit card, they're piggybacking off of my credit card,
right, to
get their credit score at that 800. Okay.
And people that don't have or don't know anybody that have high limit credit cards, they can go to trade line companies. It's a list of credit cards that they can buy that will stay on your credit for 60 to 90 days. You can get an extension. That will help your credit. If you're trying to get a house, that's a hack. You can get 3-4 trade lines, and them trade lines say 30,000, 50,000, 40,000, 20,000. They're gonna stay on there for a good 60 days while you trying to get that house. But just remember, they're gonna come off. Your score gonna drop. So in between that time, while your scores are high, you need to go to Navy, you need to go to Chase, you need to try to get your own high limit.
Okay.
You need to use how strong your credit profile is at the time to build your own.
To qualify for your own
Right.
credit line. Okay.
That's a hack. So that's for free.
That's a hack.
Yeah, it is. Because if you don't have any trade lines and they come to you, that's the first thing that's going to put them back in the game, is having several trade lines to help build the strength of the credit profile. That's the quickest way. Unless you know some people or you know some family members that will allow you to do that. And then your family members don't even understand. They will even tell you no, and they don't even understand. You're not trying to get a credit card from them. You just want them to be put
An
you down
authorized user.
They don't understand that.
I actually had somebody ask me that once. Hey, if I add so-and-so onto my credit card as an authorized user, they've got bad credit. Is it going to affect or bring my credit down just by adding them on?
No, not at all. Now, if you get that joker a credit card, well, it may hurt you, because if his credit bad, he may go use that credit card and buy a whole bunch of clothes or something like that. But just because he's an authorized user,
paying it, yeah,
it never affects the person who has the great credit.
Just don't give them the credit card, right?
Just don't give them the credit card.
Yeah.
But even grown folks don't understand. Hey, can I pick it back off your credit? No, you're not giving me a credit card. You just really
giving me a little boost. Yeah,
right, a big boost.
Yeah, you're right. A big boost. You're right.
But they hadn't been educated on what piggybacking is and trade lines, so they think that you're going to get a credit card and mess their credit up.
Mess their credit up. Yeah,
it's crazy.
Very true. So what's the typical time frame once somebody starts credit repair to see an increase in their score? And how much usually of an increase do they start to see?
It really, it's a case by case, Tiffany. You can see improvements in 30 days, 30, 45 days. But if you got really bad credit, or if you're really trying to achieve an 800, you need to let somebody stay on your credit at least 4 to 6 months. Sometimes it happens sooner, but typically it's going to be 4 to 6 months. And if it's really, really bad credit with repossessions and bankruptcies and inquiries, you got 40, 60 inquiries because you're trying to get a credit card, you keep getting denied. So that's a hard pull every time you try to apply. It's going to take some time, but people feel like once you dispute stuff, their credit's supposed to get right in 30, 40 days. Once I dispute your information, it's up to the people at the credit bureaus to put these letters in to the Oscar system and let it do what it's supposed to do. It's out of our hands once we mail it. We can only do something every 30 days. Once another cycle hits, then we go back to disputing. And we keep disputing. But people really feel like they will call me in 2 weeks and say, have you heard something? No.
It's going to take at least 30 days, right?
It's going to take at least 30 days for me to see something on your credit profile. And sometimes it's longer because we don't know how fast these people are feeding these letters. And you got millions and millions of people that got bad credit around the world that's disputing stuff off of their credit. So patience.
Let's just say you don't have bad credit, but your score is low, primarily because you either don't have enough credit and also your utilization on what you do have is high. Would you still recommend somebody like that for a credit repair program?
Yes, because they probably don't have the resources to either find somebody that they can piggyback off of,
Mm-hmm.
or they don't have the knowledge of, okay, I need to go get some trade lines, or I need to go online and buy some trade lines to put on my credit profile so I can get my own high-end credit card. So even though we don't have to like take a whole lot of stuff off, we still build people's credit profiles up. We're just not just a credit repair. We can, show you how to build your credit profile, because you're right. If you don't have nothing on your credit, it's just like having bad credit.
Mm-hmm.
If you ain't got no trade lines, no credit cards, no nothing, you're still at the bottom of the barrel.
Right.
So
what is the highest credit score that you can have, and what's the lowest?
the highest you can have, the highest I've ever seen, 848. That's the highest I've ever seen. The lowest I've seen was like 402.
Mm.
And that was, this person they just didn't care about their credit. But to his credit, the person he was dating, she cared.
She cared, you say?
Yeah.
Oh, she cared. So she got him in the program.
She got him in the program and said, dude, you got to get your credit right. Because her credit was here.
Mm.
And his was in the garbage. But to his credit, he was patient. He did what we asked him to do. And his credit actually got better than hers.
Mm.
Because her utilization, remember, she never got in the program. So
Right.
her utilization was pretty high. And once he got credit cards, he always paid them off. Now, he had a great job. So when he used his credit cards, he always paid them off. So his utilization would be like 1%, 0%. And hers would be like 50, 60%. So he had to wind up educating her, like, you need to pay these credit cards down. So your credit score can go up. And then her scores went up. And, they got a house and a car. And, I keep in contact. Well, I actually went there closer. His scores were horrible because when you have a great income, you feel like you can buy everything.
Right.
But you're losing because you don't have to buy everything at that particular time. If you got great credit.
No, Tim, I like to buy it when I want it.
Yeah, and that's what he was doing. He was losing money though. I'd rather use the bank's money than my own money. Let the bank take the risk. Why do I have to take the risk? That's what we should be educating our kids and people that know about finances is it's a whole lot of money out there for you to go get if you got good credit. You can't get it if you got bad credit. You will keep using your money and your money gonna run out. These banks' money not gonna run. You go from bank to bank to bank to bank. They want to give you money because that's how they make money. By loaning you money. But again, I've been Black a long time, and it took me a long time to get this kind of education. And I didn't get it from Georgia College or the University of Kansas. I love y'all. I didn't get it from Liberty. I didn't get it from Walden. I didn't.
Life experience, huh?
Life.
I don't think we mentioned what are the major credit bureaus that everybody reports to.
Equifax, TransUnion, Experian.
Is there one used more so than the other when people are pulling your credit that you've noticed?
Equifax.
Equifax more?
And it's the hardest to clean up. They're the most stubborn. TransUnion, normally people have a really, really high TransUnion score. Experian is the easiest to get inquiries off. So all of them have their little quirks. So you just have to deal with them accordingly. But Equifax is usually the one that you have to really keep aggravating and disputing. And the other two are pretty, I'm gonna say easy. None of them are easy, but stuff tend to come off easier with those two.
Hmm. Now, the other day we were talking about bankruptcies
Mhm.
and them falling off at their timeline. And you were
Right.
telling me that they actually don't fall off. You still have to dispute it.
Right.
Why is that?
Because it's not their job to go on your credit report and take it off. It's their job to put it on there. It's their job to ruin your credit for the 7 years it's supposed to be on there. But none of them will say, you know what? We put it on there, so now we're going to go back, we're going to take it off. They don't do that. Even when you pay a bill off, you can pay a bill off and satisfy that debt. It's still going to stay on your credit report until you do something about it. You can pay off everything on your credit report that's showing negative. If you don't have somebody take it off, or if you don't dispute it, it's still going to stay on there. And you've paid the debt, because it's not their job to go back and take it off. It's their job to try to ruin your credit.
So even after that 7 years, if you don't go in and request it to be removed, it's still sitting there for someone to look at it.
Yeah.
If they go back that far, I guess.
They're going to go back that far. Especially trying to get a house. They're going to keep looking. Because most lenders are trying to find something bad. Because now their job is easy. We're just denied a loan. They ain't really trying to, find out the good stuff.
Well, hey, guys, FYI, the people I work with, they're trying to approve your loan.
Well, I'm just saying, if
look, they want to make money, they want to put you in that house, and
they do,
but
they're gonna comb through your credit profile because it's their job. Because if they
I was gonna say they have to,
right? Because they have to. So before you go in there, you have to know what's on your credit report, and you have to make sure it's jam tight when you go in there. So it'll be an easy process for yourself. A lot of people don't, when they get ready for a house, it's like mental anguish because they hadn't done the due diligence to prepare themselves.
So with that being said, where do you recommend people go to pull their credit? I mean, I know you can, there's lots of sites out here right now that are offering, tell you your credit score. I know Credit Karma is one of the more popular ones, but they're not always right on target with what your actual score is. So where do you recommend people go to actually pull their credit report to see what's on their report and know what their actual score is?
My choice would be Identity IQ. It's probably the most accurate. And right behind it, it would be Credit Check Total. But Identity IQ is the one that, if it says that you have a 750, 9.5, 9.9 times, it's accurate. Credit Karma, it can be so off that it's just not even funny. It'll just make you mad. And,
really?
Had a lady who said, yeah, I got a 650 score on Credit Karma. I said, well, let's go to Identity IQ. And it was like 510 or something like that. Because it was showing everything that was on her credit. And Credit Karma wasn't showing certain things that was on Identity IQ. It wasn't even showing up on Credit Karma. So it was giving her a false higher score than what she really had. So I like Identity IQ.
Okay, so Identity IQ, or the second one was, you said Total?
Credit Check Total.
Credit Check Total.
Right.
Okay.
But so that's a distant second. It's a distant second. Second choice.
Identity IQ is the number one choice.
I feel it is.
Yeah. Right. I've been on there. They are pretty good. I do know, for those of you who are concerned about how much that costs, they do offer like a 7-day trial. You can request what you want to request within that 7 days and then cancel the service. That's what most people do, because you really just want to pull that report. However, Tim, I know you may recommend they hold on to that for a while, just to be able to monitor their credit score on a regular basis.
I say keep it forever, because if something pops up on your credit, you're gonna get an alert. It's gonna tell you what it is. I mean, right then, as soon as something pops up on your credit, it's gonna alert you. And you need that, because you don't want to be in a situation where you're trying to set yourself up to do something with your credit, and boom, something is on your credit you need to get off, but you need to do something with your credit in the next week. And getting this particular thing is going to take a cycle or two of 30 to 60 days. So I like it, because if something's funny going on with my credit, it's going to alert me. I can go in there, I can look at it. I don't really get those alerts because I look at my credit every day, 3-4 times a day. I'm that paranoid about my credit, and you have to be that way, because
just with identity theft. Well, I guess, hey, look, if you do have one of those high scores, I guess you might want to check your score often, because you do have those people lurking in the dark web to steal your identity and go shopping.
Easy. Especially if you're doing a lot of business online and you got a lot of information on your computer. You got to really make sure that your information is secure on your computer, and even now on your phone. So when I had bad credit, I didn't care about none of that, because you could have got my score. You ain't getting that anyway.
Right.
A lot different now. If you get my Social Security number, I could really feel it for a while. So.
Absolutely. So we've covered a lot of things. Just to kind of sum it up for everybody, what would be, I guess, 3 takeaways for people to be aware of when they're thinking about their credit, and how can people reach you if they're interested in your service?
You can reach me at www.Mr.800.com.
I'm gonna get you to repeat that again, because your sound.
I know my phone is on. Let me turn it off. I'm sorry.
Okay, yeah, we can hear you now.
My website is www.Mr.800.com, or you can call me at 442-309-6381. Takeaways, you got to start. A lot of people are a lot of people are afraid to start fixing their credit. You can never have good credit if you don't start. So that's the first thing. The second thing is find somebody that is going to educate you along the way. Just because you get good credit don't mean you're going to keep good credit if you don't have the education behind it. And the third thing is, once you get to that upper echelon with the 800 score, is use it in a wise fashion. Leverage it. It's power in going into a bank and going into a car dealership. They treat you different. Do a case study. Go into a car dealership now with bad credit, and then 6 months later, go in there with good credit. They'll give you wine and cheese, or you'll watch a video. They'll get you a steak. They'll do anything, because you're about to get something that's going to help them and help you. And it doesn't take a lot of work. A car dealer, if you got a bad score, you got to run your credit to 20 banks that got high interest trying to approve you.
Right.
But if you got good credit, you can say, listen, I want you to run my credit to the Mercedes-Benz Financial. That's it. I know I'm going to get approved. That's when you got power. When you don't have that kind of power, you just go in there like a slave, like, just please get me a car and a loan, and you're You're gonna have a Hyundai Sonata paying $2,000 a month, and this is 2006. You
With
know,
a 14 interest rate, or 14% interest
14,
rate.
49% interest rate, and so
Yeah.
you don't want to be in those situations. You want the best interest rates. If you're looking for a house or trying to get a home, you want the best interest rates. So those will be my takeaways, because anybody can get there. Don't let nobody tell you that you can't get there. You just have to start. If you don't start, you're not going to get there anyway.
Well, those are wonderful takeaways. I just want to thank you for your time this evening and actually educating my viewers. I hope that everyone got a lot of great empowering information that they can utilize. And please reach out to Tim if you want to just take that start. I know I saw a really good commercial, and one of the questions was, hey, is it really expensive to get your credit repair done? And the person responded by saying, it's even more expensive to not get your credit repair done. So I would leave everybody with that.
Mm-hmm.
Let's think about the long term and not the short term. Do what you need to do. This is a brand new year, 2022, and we want to put ourselves in a position where we can actually be empowered and make a difference in our community, and we can help our friends and our families and leave a legacy for our kids. That is very important, especially for us brown-skinned people.
Yes.
That's something that I want to do, and I know most people who have kids, and even if you don't have kids, you want to leave a strong, positive legacy. Having good credit, being able to leverage that credit in a smart way is going to allow you the ability to be able to do all the things that you're trying to do without touching your money.
Right.
Like Tim said, let's use the bank's money. Let's leverage it, keep our money in the bank. And that way we can go over here. Let's say I want to invest in a property.
Right.
I can use the bank's money to go and purchase that property and leave my money in my account in case I need it for an emergency.
Right.
So these are the type of things that we need to start thinking about. Again, it's more expensive to not start in getting that credit repair than it is to actually go ahead and get started and get your score up to that 800 mark. I'm still in the process of trying to reach that goal. I'm close, but not close enough. So, Tim is helping me out on that front, and I will expect to be there by this year, Mr. 800.
You will be. Won't stop.
Look, I know it's not all on you. I have to do my part too. I'm going to do what you tell me to do. I'm a good student, so I'm going to do what you tell me to do. So with that, I leave you all. If you like the video, please hit the subscribe button and also like the video. If you have questions, you can always reach me. My website is TiffanyNicoleRealtor.com. or my telephone number is 478-718-1004. And we are signing out. Have a good evening.